Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra with me, Shel Bhatnagar, and this is Market Today, a show where we'll help you understand the closing action on the D Street. While the markets have slipped to the lowest point of the day right now, 260 point of a loss on the Nifty, 22,042. So it's below that 22,050 odd mark, and over a percent kind of a cut can be seen on the Nifty. And the Nifty Bank is down by about 0.6%. It's across the board sell-off that you can see, not just the benchmarks and the Nifty Bank, but even the broader markets. The Nifty Midcap 100 index is down by over a percent. So the broader markets are seeing a deeper pinch in trade today. Across the board, when we talk about various sectors, you will be able to see just a very minimal green on the screen. It's just autos that are holding up to that 1% kind of a move in trade, and the PSU banks are just up by 0.3%. Barring these two sectoral indices, rest of the sectors have all drifted into the red, with most pressure being seen on oil and gas. That's down by 2.5%, realty that's down by 2%. You have a percent cut on the private banks. Then you also have a pharma loss right here, 1.8% downtick on this one. Metals are down by about 2%. FMCG has lost seen about 2.3% odd as well. So across the board, there is severe profit booking that's taking place and severe selling pressure that can be seen. Even on the Nifty, just about 6 to 7 shares hold up into the green. Rest of them have all drifted lower in trade. Shell.
Good afternoon, ladies and gentlemen. Let's look at the Nifty from the point of view of how the chart is structured. And on this weekly expiry day, sadly, I have nothing positive to contribute as far as the index is concerned. Sakshi mentioned the day's low, 270 down, 22,034. Now, here is the most significant part. The 50 DMA, a very, very strong support level, has been surrendered to the bears. Therefore, the sentiment is now ruled by bears on the Wall Street. Two negativities. One is, a set of earnings which is disappointing the market. Just look at the top losers as far as the Nifty is concerned, and that's a very, very painful picture. You see L&T sort of dropping very sharply, and this came in despite a good set of guidance, despite a strong set of numbers. L&T at the moment is the counter trading fairly weak in trade. You have the price right there in front of you. What else is bothering the market at the moment? There is selling pressure that is seen on Dr. Reddy's, 3% lower today. The price being 6,067. Asian Paints post earnings again disappointing, 28.39 down 2.5%, and of course a bit of profit booking happening across the board as far as stocks such as Hindustan Unilever and Ultratech are concerned. As Sakshi pointed out, it's only auto, but auto we've discussed in great deal in the morning session. Now let's look at why this selling pressure is concerned, and I'll also like to discuss earnings of State Bank of India. Blowout quarter, very, very strong growth in profit, in net interest margins, a commensurate drop in net interest non-performing assets as well as gross non-performing assets, and the stock without any doubt back in the record highs list. At the moment 2% higher at 827. So this is one of the very few bright spots that you see in the market today, apart from the auto space. Across the board there is selling pressure that's being witnessed. Let's look at how L&T is doing. 5.8% lower, 3283. This is also accompanied by a fairly sharp rise in volumes. This is post earnings. 1 crore shares have been traded, which are about 3.8 times the 5-day average. So this fall is coming on very, very sharp volumes. Ditto Asian Paints, the 5-day average is about 2 times more at about 24.45 lakh shares. HDFC Life in the red, Eicher Motors 0.5% lower. BPCL and HPCL. One good news coming in from HPCL, the company announcing a 1:2 bonus for its long-term shareholders, but earnings again showing a drop in terms of gross reporting margins, in terms of the refining margins that have come down. Let me just review a number of how the HPCL results have come out. They're right there in front of you. Fourth quarter GRM has dipped to $6.9 a barrel from $10 a barrel a year earlier in the same quarter. and of course you have a fairly underperforming counter as far as prices are concerned, down 3.7% at 503. We'll be shortly joined by two technical guests, Mr. Raghavendra Singh, he's a market expert, he'll be joining in shortly, and of course Vinay Rajani, he'll be joining it from 3 p.m. onwards. He's from HDFC Securities. Okay. Mr. Raghavendra has joined us. Mr. Singh, good afternoon. I wish we could talk about positivities in the market, but the 75-minute chart on the Nifty points to 21,800 being invited in by the bears. Your view on the Nifty and your view on India VIX. Anything else that catches your fancy?
Very good afternoon, Sakshi. The thing is, today is the weekly expiry, and the pressure is only because of that, weekly expiry, I believe, because, yesterday 22,300 put writers were around 1.5 CR, and 2,200 put right, 22,200 put writers were around 1 crore open interest there. So I believe the kind of selling pressure we have seen due to the, LNT and few more heavyweights, I believe that has dragged down the Nifty because of this heavyweight selling and for this weekly expiry. So I believe this selling pressure can absorb tomorrow, and 22,000 and 21,900 is the strong support from where we have taken 2 times we had taken the reversal. So I believe Nifty should take a pause here, and we should bounce back strongly up to 22,300, 22,500. Shall, there is one more thing which I would definitely like to highlight. 22,500, 600 is the strong resistance, and which I believe is very difficult to break in this month. So I think 20,000 to 22,500 is the range. 22,000 to 22,500 is the range for this week and maybe for the next week. Once we'll break these levels, then we can expect some more downside and more upside after 22,000 or 21,900 breakdown, or else we can see much higher level above 22,500. So this is what I believe for this kind of movement, and this is not heavy selling. I believe this is just because of expiry selling.
All right, so that's the view on the markets. Raghavendra, two big earnings that have come in. Shell also detailed for us the key metrics that have come in. Let's start off with HPCL first and understand from you, how do you really assess? The stock is down by 3.5% post the earnings. It's the GRMs that have slipped from $8.5 a barrel to $6.93 a barrel sequentially. That's a big problem there, even though we have seen a growth on the PAT front, on EBITDA front as well, and the margins have come in at 4.2%. And of course, there is a bonus announcement, the first one in 7 years for HPCL. 1 share will be given to those holding 2 shares of HPCL. How do you look at the stock is now testing 500 levels?
So, Sakshi, the results are good. I'm not saying that the results are bad. The thing is, if you remember, now we are purchasing the oil from Russia at, almost very low cost. And I believe the refinery cost is a little bit higher, but I believe the cost of the purchasing oil is quite low. Apart from that, the company has announced the bonus. The quarterly results have seen some kind of, there are some more expenses due to maybe salary hike or maybe some other expenses. Because of that, there are some, backmaster performance by the HPCL. So I believe the stock price should react positively after day after tomorrow or maybe tomorrow, because today is the selling pressure because of all heavyweights are down and indices are down. So I believe the results are good and the stock price should give positive response.
Okay. Raghavendra, what about SBI And how do you see the earnings there? Profit has come in at 20,698 odd crores. NII is at 41,655 crores. And we've seen a substantial improvement all across the board for SBI. How would you really assess? 1.5% higher at 823 odd levels. I remember, I think about a month or so back when you were talking to us about when the stock was still hovering around 720, 730 odd levels, that 800 is something that you were looking at. That level's now crossed. After the earnings, how would you really look at SBI now?
Definitely, Salchi, the results are fantabulous. I believe the results are very good, and this can be the turnaround story for the PSU bank. So I think SBI have delivered very good results. 850, 860 is there on the card, and I think that should come tomorrow, or maybe day after tomorrow.
Okay, let's also dip into the live press conference where Chairperson Dinesh Khara is talking about the results, detailing for us some of the key insights. Let's quickly listen in to what he has to say on the SBI earnings.
The corporate segment is also showing at 6. I'm glad the progress we have made in banking. 61% savings bank accounts are opened through in financial year 24. Leveraging analysis with significant accretion at 1.3 trillion as against 1 trillion this year. This is essentially attributed to analytical leads which we are leveraging full, and it has led to about 32% growth in the digital acquisition of the business. With regard to asset quality, our gross NPA ratio has improved by 54 basis points YOY and stands at 2.2 as of March 24, and continue to be at its lowest in more than 10 years. Our net NPA ratio has improved by 10 basis points and stands at 0.57%. Slippage ratio for financial year 24 has improved by 3 basis points YOY and stands at 0.62%. The consistently improving asset quality is also reflected in our cost. For financial year 24, it stands at 0.29% and has improved by 3 basis points on a YOY basis. We are well provided for our loan book with PCR including OCA standing at 91.89% and PCR excluding OCA stands at 75%. While we are glad about the outcome in the current quarter, we are also conscious of our areas for further improvement. On the liability side, we continue to focus on increasing our share in current account while maintaining our leadership position in savings deposits. The cost base of the bank is high. However, the same also reflects our focus on compliance and establishment costs. We aim to lower our cost to income ratio by focusing on the income side. Our CET ratio now stands at 10.36%. It is the highest since the implementation of Basel III norms. Additionally, the current ROE profile of the bank remains above the credit growth trends, and hence we foresee CET1 accretion going ahead with the help of our plowback of the profit. However, the bank is open to raising equity capital if the growth trend so warrants. Our subsidiaries are also consistently performing well and continue to create significant value for all our stakeholders and most importantly for our customers. To conclude, I want to thank you all for your support to the bank, showing the confidence in the bank's ability to perform. The bank, while pursuing its own progress, contributes to the progress and growth of the economy. We remain committed to rewarding your trust in us with superior sustainable returns over the long term. My team and I are now open for taking questions from all of you. Thank you.
Thank you so much, sir. Now we move to the question and answer session with media. To ensure seamless flow of the session, we will move from this end to that end, allowing everyone an equal chance to ask. We request you to please follow the format and restrict yourself to 2 questions focused on banking. Now I request Gopika from Mid to start.
Congratulations, sir, on good set of numbers. To begin with, could you tell me what led to the increase in fee income this quarter, especially the miscellaneous fee income? So sequentially, fee income has seen a good growth. Could you tell me that? My second question is on the recent RBI draft rules on project finance. How have you assessed it? What kind of an impact will this have on SBI's P&L?
Yeah, the first question is relating to your fee income, and fee income, the major contributor to the fee income has
Ladies and gentlemen, let's get back to the market. Without any doubt, these are time-changing results as far as SBI is concerned. Any parameter that you can think of in terms of improvement, whether it's strength in return on equity, whether it's improvement in NIMs, whether it's a drop in net and gross non-performing assets, and of course a rise in both profit as well as profitability, SBI has come up on tops. It's sad that in this kind of an environment you have the weekly expiry of the Nifty planning out, and of course the negative sentiment on the Lal Street pushing the counter down from its all-time high. SBI at the moment at 820. Remember, it hit a high of about 839 most when the earnings just came in. This is a very robust set of earnings, even if we ignore today's gyrations, mainly on because of factors that are not in control with anybody. But a cursory look at the numbers will give you great heart in terms of how credit growth has happened, how the bank is navigating demand coming in from all sorts of corporate houses. Remember, there are three large corporate banks lenders in India: State Bank of India, Axis Bank and ICICI Bank. All three of them, including Kotak Bank, these are four top corporate lenders as far as the Indian economy is concerned, and all four earnings are blowout. Let's now try and focus into the positivity as far as market is concerned. I assure you, it's a great effort on my part and Sakshi's part to come up with any kind of data which sort of seems to negate this trend. And in the morning we had discussed the entire auto pack. Remember, the auto index at a record high is being used within the Nifty to balance it out, but 310 point down on the Nifty, and 22,000 is now with the bulls. The Nifty now at its lowest since April 9th, 19th, and now well below 50-day exponential moving average. Getting back to you, Mr. Singh, what would be your top pick as far as the auto space is concerned? Two-wheelers or four-wheelers?
Definitely, I would like to go with the Tata Motor because I'm expecting a fantabulous result today. Tata Motors has taken a very strong support at 1,000 level and trading above that, and I think the stock have potential to touch 1050, 1060 with the stop loss of 1,000. So I believe Tata Motor is my bet for the this week. And Tata Motor, apart from Tata Motor, Ashok Leyland is looking very good. Ashok Leyland I'm recommending on a channel so many times. I have already recommended. Now again the stock is trading around, it is hovering around 195, 2000 level. So I believe the stock have potential to touch 210, 220 in this expiry. So Ashok Leyland and Tata Motor is my two stocks which I would like to recommend for the buying side.
Okay.
So where would you imagine Tata Motors to be?
I think Tata Motors share should come around 1060, 1050.
Okay. Well, apart from this, Raghavendra, how are you looking at the slight ticks on the higher side that we are looking at from the IT space? HCL Technology is up by over 1% in such a weak market as today. How are you looking at this? Does this show a potential strength that would continue in such counters like HCL Tech and Infosys? Infosys is the top contributor on the gaining side as far as the Nifty is concerned, among the very few that are actually contributing to the positive side today.
So, Sakshi, if you check this RSI and stochastic for overall IT stocks and IT index, so stochastics and RSI are trading below around 30, 25, 30. So oversold zone is there for the IT stocks. So I believe there is a bounce back, that is the dead cut bounce back, and the SCL Tech, there is a gap between 1400 to 1500. I think the stock should fill that gap very soon. The falling wedge pattern breakout is there today, so I believe SCL Tech should touch around 1390, 1400 level. Stock is trading in oversold zone. Apart from SCL Tech, Infosys and Wipro both are looking good on the chart. So the stock, the both stock potential to touch around. Infosys is looking to Infosys have potential to touch around 1475, 1500 level. So these two stocks are looking good. SCL Tech, Infosys.
Okay. And meanwhile, viewers, Nifty has slipped below the 22,000 mark and tested that level for the first time since April 19. That's the kind of weakness that we are seeing in the markets. It's the broader markets that's feeling the pinch. The mid and the small caps seeing a sharper cut. How are you looking at the mid and the small cap sell-off, Raghavendra? And do you see a bounce here as well, since you did say that the Nifty should be bouncing back in the days to come? How about the mid and the small cap crash?
Definitely, Sakshi, mid cap, small cap, bank nifty. Overall, if you draw a trend line from January to May, I believe we are trading at very crucial level. In overall sectors like mid cap, small cap, nifty, bank nifty. So we are trading at near trend line. So I believe Nifty, if we are holding this level 22,000, 21,900, I believe we can expect some good bounce back till 21,300 or 22,300. So overall, mid cap, small cap also follow the same with the Nifty trend. So I believe small cap, mid cap should bounce back.
Fair point. Let's take a detour into prices. Sakshi, terrible scenes as far as advanced decline is concerned. We are now at 251. At the moment, there are 1860 stocks in the red versus 360 in the green. So easily 5:1 kind of a advanced decline favoring bears. And as you rightly pointed out, the low is April 19th. And much worse than that, it's 22,000 that's gone in favor of the bears. And let me just give you an update on India VIX, now at 1799. This is also shot up dramatically. I'll give you the percentage rise. It's a 5% uptick today. While it's just a 5% uptick, my own estimate is that as the week progresses and we see the fourth and the fifth phase of elections, you'll see India VIX at 21, 22. Remember, the dividend that we have in terms of muted global bond yields in the US markets, as also crude oil below 200 DMA may not last long. If they start reverse their journey on their way up and India VIX rises as well, then we are going to see some, how should I say, painful numbers coming on the Nifty and the Bank Nifty. Remember, earnings of companies such as L&T, the bellwether as far as infrastructure is concerned, are very good. There's been a beat on profit and profitability. The guidance has been superb, yet the stock is where it is. And look at SBI. I was hoping that all the bad news would be absorbed before the earnings were out, and that the stock would rise dramatically. Well, it did for a brief while, but it was a bear grip on the broader markets, and therefore the stock is now slipping. I only hope that today we close above 22,000, but there are all very clear indicators that 21,800 is on the cards as far as Nifty is concerned, Sakshi.
Okay, absolutely. Raghavendra, let's touch base on some of the green ticks that we are seeing, still trying to find the bright spots in this market. From the mid-cap space, Adani Power, I just spotted that stock. That's up by about 4.5%, 5% in trade today. How do you see the charts of Adani Power, and where do you see the stock headed now?
Adani Power has given a very strong breakout above 600 level, but I believe this is a time to book your profit because we are trading above 94, 90 RSI, and I believe that is a overbought zone. So RSI is above 90, which is not a good sign. So I believe Adani Power should book a profit. Apart from this, Sakshi shall discuss about the India VIX. So if I see the India VIX chart, so India VIX chart is near the breakout level. So I believe 27, 29 is on the card, which I think should touch by this month end, because we are into the event month, because elections are going on, and after the third phase of election, there are 4 phases.
Okay, I think there is some kind of a technical glitch. We'll again try and connect back to Raghavendra. Raghavendra, you're back. Yeah, you can tell us. Basically, we lost
So,
your audio in between. Yeah, you can continue.
okay. So, Shell, if you see the India VIX chart, monthly chart, we are into the breakout zone of the rounding bottom pattern, and I believe that pattern has broken out today. So, after 17, 99, and 18 above, India VIX should touch around 27, 28 level, which is not a good sign, I believe. So the major reason behind this is the elections are going on. We are into the event month, and after the 4th June there will be a new government. So I believe because of that there is a possibility that we can see some kind of selling pressure in coming days.
Fair point.
Absolutely.
See, the point here is that even before the 2019 elections, the Nifty had corrected about 3.5%, 4% from its then peak. So, from if you presume that 22,800 is the most recent peak, and if you take out 4% of that, you are pretty much at 21,800, and that's the number that I've been talking about. While it's painful for people who remain invested, but a correction such as this always welcomes newer, stronger people into the market, and it also makes existing people who book profit very happy. The other theme,
Absolutely.
Sakshi, that's running, and that I believe is the reason for this correction, is the very heavy sales coming in by foreign institutional investors. The last 5 trading sessions in the month of May have seen consistent selling pressure, and I hinted at this in the morning. The number for yesterday was 6,669, ladies and gentlemen, and this is the highest sales on a daily basis since April 12th, when FI sold 7,900. So if you see in the past 5 or 6 trading sessions, you have about somewhere like 10,000 crores being sucked out on a net level as far as prices are concerned. And Sakshi, this entire money has moved into China, because as far as valuations are concerned, the Chinese stock market is way relatively cheaper and more attractive to foreign players compared with the Indian market. And of course we are moving into an event, so those who book profit and move it to an asset that is relatively cheaper, it does wonders. I track the Chinese Hang Seng ETF, which is offered by Nippon Asset Management Company. Would you believe it? It's up 3% today at 295, 296. I'll just send the chart of that Hang Seng ETF. It's doing wonders, and this is where the entire money is moving. So it's sell India, buy China trade that is coming. That is the reason for sustained delivery based selling. And of course you have earnings which are good, but there are no out performances. So with these two backgrounds in mind, one must look at this fall. Now that you are already at 22,000 and 21,800 is a strong support, 200 पॉइंट ही तो दूर है, एक झटका नीचे लगेगा फिर ऊपर चलेंगे. That's how people logically look at markets. I'll just send the Hang Seng ETF picture to you, Sakshi.
Okay, all right. But like we always say, look at the bright side. 300 points down on the Nifty, but I will still try and pull out any 52-week highs that we can in this kind of a market for all our viewers. Vijay Diagnostics is one. That's at a 52-week high. 725 odd levels can be seen. NetWeb Technologies, remember this stock has been continuously on a rising trend, and this stock again is up by about 3.5% in trade today. And of course this also got momentum when Mark Mobius actually talked about this stock as one of his preferred stocks in India. Jupiter Wagons after the earnings is again up in trade today, about 3.5% for this one too, and of course this too is at a 52-week high level. Timken, as was pointed out by Shell, as far as the bearing space is concerned, is trading at a 52-week high again. Anant Raj Industries is another one that's also moving higher by about 2.3%, and it's now hovering at a 52-week high level. Let me get Raghavendra's view on any of the stocks that he is that I've mentioned that you also like, prefer fundamentally or technically, Raghavendra.
Anantraj is looking very good, above 350, 355. The stock is trading near 52 weeks high, but I'm not expecting above 378, 380 above. So I'm expecting 10 to 15 rupees upside rally from this level. Downside stop loss should be 355, 350. Apart from this, Sakshi, there is two, three stocks which are still looking good. On the lower side at this level. We are trading near 22,000, and I believe HAL, Hindustan Aeronautics, that stock is looking very good at this point of time. 3,700, 3,800 is the chart. I think from where this stock should take U-turn. The stock is trading around 3,840. So from this level, I think 3,820 is the stop loss, and the higher side I'm expecting 3,950.
Okay, got that. So that's the stocks as far as the gainers list is concerned. Apart from this, there are other stocks also that are gaining. I think some of these stocks were also mentioned by Shell in the morning. I think SKF India was something that you were mentioning, Shell, that continues to move up higher even right now, and is now trading at the high point of the day. No, it's come off, but 7.5% higher can be still seen on this one. Tata Investment is another one that's continuously moving higher. Tata Power I mentioned, and Paytm also, I think Shell had pointed out as a bright spot early in the morning in trade. On SKF, would you have a view, Raghavendra?
SKF India, the stock has recently risk test, so I don't think there is much, in technicals are there available. So I think 4,900 and above the stock is good. I would like to see for 1 more 2 days, upside rally. If the stock is trading above 4,960, 4,970, the stock has potential to touch 5,100. So above 4,960, I will definitely like to buy this stock.
SKF, I think there's some issue with your software, Raghavendra, as far as SKF's back-end data is concerned. This is an MNC listed for decades altogether, but
yes. Sorry.
From its 200.
Yes. Absolutely, sir. Yes.
It's a breakout that's happened from its.
Yes. The stock
Please
has
continue,
given
sir.
inverse.
Please continue.
Yes, sir. The stock has given inverse head and shoulder breakout above 4,800. Now the target comes around. Target comes around 700 rupees plus from this level, Shell. So the stock is trading at very good attractive level, I think, and above 4,800, I think 5,400 is the target for the longer period of time.
Okay, ladies and gentlemen, we also discussed Timken India in the morning, and my sincere apologies. When this counter was listed, it was actually Tata Timken, and then the US parent bought out the Tata stake in this one, but a very strong move coming into Tata Timken as well. Remember, about 40% of Timken's revenue comes from the railway space, which we all know is buzzing very sharply, and this one will also take out its all-time high, which is fairly close by. In the morning, Timken was at 35.78, a bit of a profit booking happening from then on. But bearings has been Sakshi, sort of an untouched space over the last many months, actually many quarters, and it's just that once we've discussed the likes of battery makers, we've discussed counters such as Bosch, we've discussed companies such as Motherson Sumi, the entire EV space, plus companies like shock maker Gabriel, wiper maker Bosch, air conditioner makers like so many of them, but we haven't paid attention to the bearing set of the market, and it's now taking a very strong revenge on our complete ignorance of this one. So apart from both SKF and Timken, which are MNC plays in the bearing sector, a lot other small bearing companies are also doing pretty well. I don't want to mark them because they are, you know, extremely, how should I say, hyperactive in this kind of a market, and given the broader weakness that we see, it's you know, best to stick with well-known and strong brand names. Let's look at Midcap 100. I don't want to discuss Paytm, although we marked it early morning, but here's an interesting stock, Raghavendra, for you. Bharat Forge, despite the negativity, despite everything, and yesterday's 15% rally, the stock is still up 0.5% and on huge volumes. What are the medium-term charts of Bharat Forge telling you? Again, they are backed by a very strong tailwind. The earnings were declared day before yesterday.
Shell, the stock has given a very strong breakout above 1300, falling wedge pattern breakout, and apart from that, 3 black crows breakout. So, with the good volume also. So, I believe the stock have potential to touch 1500 level very soon. So, now the stock is consolidating, and I believe this is an reversal pattern on the RSI also, because the RSI has just taken the U-turn. So, the stock have potential to touch 1500 plus level within a week. So, I believe this is a buying opportunity if we are getting the stock close near to 1400.
Okay. Well, on that note, thank you so much, Raghavendra, for being with us on this special edition and helping us navigate through the market momentum and sharing with us all those stock ideas and strategies on the markets. Pleasure having you with us on Business Today. All right, viewers, time to now welcome our other guest also on the show. Joining us now is Mr. Vinay Rajani. He's the Senior Technical Analyst at HDFC Securities. Welcome, Vinay, and thank you so much for taking the time out for this discussion. 330 down for the Nifty, 21,970 right now. Where do you see the Nifty headed?
Yeah, so definitely in last 7-8 session, Nifty has fallen more than 800 points and now is has already breached the 22,000 mark. And if I were to go by the technicals, if I adjoin some trend line which adjoins the previous swing lows on the daily chart, the support comes around this level only. But the way broader market is going on right now, the way panic selling can be seen in other sectoral indices as well, there are good chances that we will break this particular trend line and we move below. So the previous swing low was placed around 21,750. That's the next support. So that I'm looking for it in the coming session tomorrow early in the morning. We may see Nifty coming to that level 21,750 to 21,780. That is the logical trend technical support I can see on the Nifty. So though it has fallen in last 7-8 session, but still the way it is going, the momentum is emerged in the large cap as well as the mid cap in today's session. I think this trend line will not hold and it will continue to go down. So I see Nifty around 21,750 in coming sessions. So definitely going weak as far as breadth and the trend is concerned.
Okay. Vinay, any other stocks that you have spotted in this weak market that you are looking positively on? Very difficult to spot, but even then?
Yeah, so IT is a sector which can outperform in this kind of scenario. FMCG is another sector, is a defensive, it can outperform. But FMCG has already participated. I see some opportunity and some outperformance maybe there in the IT space. So stock like Infosys, TCS, Tech Mahindra can outperform in this kind of market. So just to save ourselves from this kind of bearish trend in the market, these stocks can relatively do better because already they have underperformed since long and they became oversold, and now some sort of defensive buying could be there in the IT space. So TCS, Infosys and Tech Mahindra kind of stocks one can look at, but very conservatively because Nifty is also getting weak on the chart. So there would not be aggressive returns out of these IT stocks as well. But definitely these IT stocks can outperform.
Okay. Good afternoon, Vinayji. What a warm welcome to you on Market Today. Yes, of course, over the last 2 or 3 trading sessions, we have been discussing this theme on IT and FMCG on business today, primarily account of relatively cheaper valuations on both sectors. And there is a set of ETFs that I have in mind when it comes to the IT index. We'll be sharing that list maybe tomorrow. But strong breakouts happening undoubtedly on stocks such as Hindustan Unilever after 4 years, Marico in particular, Dabur, Britannia, all of them showing strong traction, and definitely after earnings. In these 3 or 4 stocks, whether it's Lever, Marico, Britannia, Dabur, would you have a favorite?
Yeah, so Godrej Consumer has been my favorite, followed by Marico and so Dabur. So these are the 3 stocks which I like because according to me, these stocks I think have already posted the result, and after that we have seen some follow buying coming in, and some breakouts are also there on the weekly to monthly chart. So it is a clear cut breakout, and as it is one of the defensive sector which can do well in this kind of scenario. So I like Godrej Consumer, and the first priority should be given to that stock, followed by Marico and then Dabur. So these 3 stocks I like from the FMCG space, and these are the stocks which I am expecting it to do well in the coming sessions.
Okay. Let me also put you across in terms of an odd question. We've seen a fairly sharp correction coming in on Larsen and Toubro, and the stock is now very close to its 200-day moving average. The stock correcting very sharply despite a stunning set of numbers. We are at somewhere like the lowest since 4th of December on LNT. What according to you could be a good buying zone for LNT?
Yeah, so as you said, it is hovering around its 200 days EMA. So definitely this 200 DMA, which is a long-term support or resistance for any large cap stocks. So in the history, we've seen that the liquid and large cap stocks like L&T gave respect to this kind of levels, which are the 200 days moving averages, exponential moving averages. At present, this level is placed at 3227 to be precise. So that is a strong support, we can say. The another evidence is like I can see the chart in February 2024, stock hit a low of 3263. Right now the low is 3266. So it is also hovering around that support. So according to me, 1 or 2% downside could be there, definitely, because of the panic in the market. But as far as stock is concerned, it has reached the long-term support. Not only the 200 days moving average, but previous swing low on the weekly and monthly chart is also placed. Some indicators like that we have been following, like super trend indicator on the weekly chart, that is also coinciding with that level. So I see a strong support in the range of 3200 to 3250. That can act as a support. So we can expect a bounce back. I don't know what is going to happen with the market. If panic selling comes, this support can break. But everything leaving all this apart, I see a strong support in the zone of 3200 to 3250 in the LNT.
Right. The all-time high for L&T was on 2nd of April, which was 3860. And just an aside, Sakshi, there have been so many fund launches in the last 2-3 weeks. Remember, we spoke to the gentleman Mihir Vohra. He's launched a flexi cap fund. There is HDFC Manufacturing Fund on, and all these fund managers, I'm sure, are rubbing their hands with glee, given the fact that frontline stocks have corrected so well, and it allows them to get into this kind of a market at fairly decent, relatively cheaper valuations. Also remember, the SIP number for the month of April has come in, and ladies and gentlemen, that's 20,000 crores. It's an all-time high. So all this money is getting deployed slowly but surely. All you need to do is not to panic, and if nothing works for you and you don't understand how to take benefit from this kind of a negative move, just buy a simple ETF on the Nifty and the Bank Nifty. Sakshi and I will be discussing 2 or 3 numbers and 2 or 3 funds for you tomorrow. And given the fact that markets are closer to their bottom, or what possibly is the bottom, 21,800 on the Nifty, even if it falls to 21,500 or worse, 21,000, those are the ETFs that you must regularly buy over the next 5 or 7 trading sessions, and believe you me, you will be reaping rewards post June 4th. Remember, corrections are supposed to be bought. Good news and good prices don't come together, and great prices and good news are not synonymous with each other. So you must buy the dip, and you must buy the dip sensibly, Sakshi.
Okay, absolutely. Buy the dip, that's the word. Let's also talk about some more earnings coming about. So, Escorts Kubota has come out with the numbers. Here, the net profit for the company has grown 30% to 240 crores, although the revenue has seen a dip of about 4.6%. Margins have improved year on year from 10.8% to 12.7%, especially the tractor business margin has also improved from 10% to about 11.2%. The stock has come off the day's lowest point, but still is down by about 2.5 odd percent. Vinay, would you be able to look at the charts of Escorts Kubota and tell us, of course the numbers look prima facie good. How are you looking at the stock?
So choppiness would be there because till now auto sector has done exceptionally well, and till yesterday Escort was looking very strong on the charts, and almost the all-time high was registered in yesterday's session, and today after result it has fallen by 2.5%. So overall still it looks stronger and resilient as compared to the other large cap stocks, but I don't think there is a trading opportunity on the long side, because if it is not going down, it will not rise also in this kind of market. So I would suggest that there could be some time wise correction in this stock, and better to stay away as far as short term trading is concerned. But overall trend is quite strong. Once we see Nifty stables at some point of time, at that time we can see some stocks which can outperform or which actually came out with a good result. So this is the stock, definitely I will look at it once the market stabilizes, but at this point of time today I would not go long, because I would am a bit cautious on the market, and in the coming sessions we may see lower levels in Escorts also.
Okay, understood. So the markets have slipped even further, extending losses. Now, lowest point is around 21,933, and the Nifty has lost somewhere to the tune of 366 odd points right now. In fact, it slipped below the 21,950 odd mark as well. Sensex has lost about 1,100 points intraday trade. Midcap index is down by about 2 odd percent. So it's the broader markets that are contributing to this sharp downtick and the extended fall that we are looking. Let's also look at the stocks that are contributing most to this fall. HDFC Bank, 63 points on the downside as far as contribution to Nifty is concerned. L&T is contributing 60.6 points. Reliance is contributing 40.4 points. ITC is contributing 35 points on the downside. Asian Paints, Bajaj Finance, ICICI Bank are some of the others who are contributing about 10 to 15 odd points on the downside. What's still holding up, although with lesser points in the greener side, Infosys, Tata Motors ahead of earnings, SBI post earnings, M&M, Hero Moto post earnings, and HCL Tech and Bajaj Auto, the only stocks that are holding up into the green as of now as well. Shell, what else are you looking at?
Sakshi, in complete honesty, I'm looking at the clock. We are now at 3:18, 12 minutes away, and across all WhatsApp groups that I am a part of, you have that famous meme coming in, "Ye Surya kab ast hoga?" People are waiting desperately for 3:30. Of course, 21,800 is coming, but that doesn't mean that it should come in the last 12-10 minutes. But like we were discussing, it's very hard to look at positivity in this kind of a market. But all I'm trying to say is that in times such as these, one must always believe this market dictum that the world is not going to come to an end. All is lost, and when all hope is out of the window, that is the time to buy an ETF, buy the best possible ETF in India. That's SBI's ETF, in which the EPFO, the Employee Provident Fund, also puts in money. Like I mentioned, we'll be showing you 3 ETFs tomorrow. Please do stay glued in the early part of the trade tomorrow. and we'll be discussing strategies to how to buy this ETF and take advantage of this fall and ultimately come out in profit. So those are the three ETFs that we are talking about. I was just hoping that we would be in a position to show the ETF of the Hang Seng index, which is available in Indian rupees. I'm wondering if the PCR can fire it. Let's see whether that thing can be seen on screen, and then you will see how sharply it is an inverse correlation between the Nippon Hang Seng index and the Nifty. It's rising and we are falling. Yes, this is the one on the screen. Absolutely. This is the intraday chart. PCR, can you fire a long-term chart, maybe 6 months to 1 year, and then even 6-month chart will do. That will show you how this has moved from 230 to 296 now, and it has only gathered strength. Yes, from a low of 9th Feb, which was 235, we are now at 296. That, ladies and gentlemen, is how the markets move contrary to most expectations. You buy the fear that was there on the Hang Seng, and you sell hope, you sell froth, and you sell a mad rush towards equities that was seen in the Indian markets. Sakshi.
Okay, 321. Vinay, we will put the ball in your court and ask you to give us any STBT, BTST trades.
Yeah, so many stocks are actually looking weak on the charts in the F&O space. If I were to look at, then I would rather go for the stock like IOC, Indian Oil Corporation, which is a OMC company and also came out with a weak result. So IOC looking weak on the chart right now. May future is trading at 150, so 7.5. I would keep a stop loss at 161 and we can expect a downside target of 151, 152 levels. The another stock which is clear-cut breakdown on the chart is the IndusInd Bank. So IndusInd Bank has actually broken down below the multiple bottom support which was there around 1425 and that is actually breached on the closing basis. So that is looking weak on the chart. So IndusInd Bank can be shorted here with a stop loss of, let's say, in May future, I would suggest a stop loss of 1 minute. Let me open the future chart. IndusInd Bank May future is trading at 1412. So keep a stop loss at 1445 and you can expect a downside of, let's say, 1340 to 1350. So 50-60 rupees downside can be expected in the IndusInd Bank. The another stock, as I told, the IOC, that these two stocks are looking weak on the charts.
Okay. So that's the kind of move that we are expecting on these two stocks. Apart from this, let's again look at some of the other gravity defiers at this point in time from the market sentiment in the F&O space particularly. Of course, the two-wheeler stocks are ruling the roost as of now. Hero Moto, TVS Motor, Tata Motors, M&M, Bajaj Auto. But apart from this, there are some others also that are pulling up in trade. Bandhan Bank, as I had suggested in the morning, that's also holding up to its status in the morning, since morning. I think about 1.5% higher in trade in the F&O space. And the banking space has Punjab National Bank, that's come up 1.2% higher. Vinay, anything exciting in Punjab National Bank shares?
Yeah, so Punjab National Bank is closing below its long-term moving average support, which is 60 days, 63 days average, which I have been tracking, which is nothing but the 1 quarter average. So it is closing below that level, and it also came out with results today. The results are okay, not like SBI. SBI actually came out with a very good results, and it actually was hovering around its all-time high. But PNB relatively looking weak, and the way Canara Bank has fallen, Bank of Baroda has fallen in last couple of sessions. PNB is also going weak. So along with the market, PNB can fall from here. So I don't see strength in the PNB. The next support for the PNB comes in at around 114, which happens to be the previous swing low, which was registered in the month of March in this year only. So 114 is the next level as a support. And unless this PNB crosses a level 27, I would remain bearish on this stock.
Okay, got that. And markets are at the day's low even now. As of now, I think not much is really moved since the stocks that we were discussing. And India VIX, That's even soaring higher, 18.22 now, 6.6% higher for this one now. Binay, could you look at that and tell us, where do you see it going forward?
Yeah, so India VIX was previously 2 weeks back, it came down to 9.86 and now it's almost double from that level. So it is nothing but the volatility index, the fear index. It has got negative correlation with the equity market sentiments. So as market has turned weak, the India VIX has started going up. So it is nothing but the value derived from the Nifty stocks options. And right now the volatility is there, fear is increased. So we can expect some premiums to remain high because of that. So put call ratio, put call parity will definitely keep a premium on the call side is also higher. So definitely it is, as we saw in the history, that it is having a negative correlation with the sentiment. Same is getting reflected in the prices of large cap, small cap and mid caps. So definitely the trend of VIX has turned bullish and the trend of benchmark indices like small cap and mid caps has turned bearish. So this can continue for a while and at least for the short term.
Sakshi, I'm telling you, you are looking at 22 to 23 on the VIX fairly shortly. And of course, this is now a 350 point cut. We are already at 21,950. Remember, let's look at the May 16th option chain, because that is the one that is coming into effect fairly soon. Okay, let's look at support levels. Well, I don't want to break anybody's heart at the moment, but 21,900 is a fairly decent support. Fresh additions of 8 lakh puts have been put into place. Then you have 21,800, which is at 8.42 lakhs. I'm talking about new additions. And Sakshi, as of now, the strongest support is at 21,500. About 20 lakh new puts have been added by bulls. Let us see. But the fact is that 21,800 is what is likely. Let me just see how index futures are trading in the US markets. Just a moment. Dow is down 90 points. S&P is down 12 points. Nasdaq futures are down 55 points. There's mild round of red on Europe as well. So it's not looking good. But what's life if we don't have a bit color that is red on the markets? Be that as it may, this is all fine. And let's look at the broader advanced decline ratios. 1952 stocks are in the red compared with 329 in the green. Let's look at the Nifty advanced decline ratio. It will give you an idea of how sentiment is moving. 43 stocks are in the red, just 7 in the green. How about the NSE 500 is what I want to see. Yes, 440 stocks in the red, 54 in the green. That is how it is. Any 52-week lows today maybe? Oh yes, so many of them. Okay, now this is really interesting. PTM, no issues there. Tata Technologies 1014, this is a low. Bata 1305. Z Entertainment 131. Asian Paints, how surprising, 4% lower, 2711. And of course Berger Paints 483. So these are fresh 52-week lows in a market. Sakshi.
Right, but like I always say, brighter spots, and it's coming in from the mutual fund space. For the April month, we have the mutual fund data wherein the SIP inflows continue at record streak, and for the first time we have seen SIP figure crossing 20,000 crore mark. It's come in at 20,371 crores, an increase from 19,270 odd crore rupees that we saw the previous. So there is a continuous improvement as far as the SIP flows are concerned. This is despite the fact that the equity mutual fund flows have actually slipped in the month of April, and they are down about 16 odd %. But SIP flows have continued on the higher side as well. Last word, Vinay, how do you advise viewers, investors to participate in the markets tomorrow, which will be the last trading day of the week?
Yeah, so for traders, I think one should remain cautious. After today's weakness, we can expect some the extension of the correction. So one should remain cautious. Still, mid caps, small caps are looking weak and can see a further correction. So for traders, I would advise to cautiousness. And as far as investors are concerned, I think overall setup is quite good. The corrections are the part of the market. Nothing to worry about it. You can accumulate good stocks at lower levels. So better to not to panic at this point of time as an investor, but traders, yes, for with the risk management one should play.
Okay, with that, viewers, thank you so much, Vinay, for being with us. Wrapping up the markets now, you do have a red tick on the Nifty for the another day, 335 points lower, 21,967. So we've slipped below that 22,000 mark and have ended lower by about 1.5% on the Nifty. The Nifty Bank is lower by 1%. It fell about 507 points towards the end of the session and at 47,513 now. Among the sectors, barring the auto, all the other sectors slipped into the red. Deeper cuts being seen on FMCG, 2.2% cut, metals 2.8% down, realty 2.3% down, healthcare 2% down, oil and gas 3% down. 1.7% down for the consumer durable space as well. Private banks 1.5% down, and the pharma index also down by about 2%. All across the board, big sell-offs being seen. Mid caps and small caps, of course, a deeper pain. Mid cap 100 index down by 2%, small cap index down by 2.7%. So broader markets definitely losing the most. In terms of the negative contributors, like I pointed out, the biggest losses came in from HDFC, L&T, Reliance, IITC and Asian Paints in terms of the contributors towards the downside. On the big losers on the Nifty today, you have L&T, Asian Paints, BPCL, Coal India and ONGC. On the gaining side, Hero Moto 3.2% higher, Tata Motors, M&M, SBI and Bajaj Auto continued to remain on the positive side. With that, viewers, we will wrap it up at that, but do stay tuned on to Business Today as we continue to get you all the coverage from the world of business and finance, even beyond the stock market hours.
Hello and welcome to Market Today. Joining me now on the show is Dr. Praveer Sinha, the CEO and Managing Director of Tata Power, one of India's largest integrated power companies, which has reported a profit after tax for the full financial year at 4,280 crore and maintaining a strong growth momentum by reporting PAT growth of, for the 18th consecutive quarter, at 1,109 crore for the fourth quarter.